Hey everybody, just a quick reminder that starting July 1st of this year, the Washington long-term care tax is set to start. So if you remember back a couple years ago, Washington State passed a law saying that everyone has to start paying money out of their paycheck towards this new long-term care program. The program doesn't officially start until 2025, and the whole purpose of it is to help provide some type of payment to take care of long-term care services in the future. So the program starts on July 1st. The current rate is set to start pulling at 0.58% of your gross pay. So basically, for every $50,000 of income that you make, it's going to cost you about 24 bucks a month. You make $100,000 a year, you're going to be paying about $40 per month. Now, currently, there's no way to opt out. That provision expired back in 2021. So if you did not get a private long-term care insurance policy before then, you're going to be stuck paying this new long-term care payroll tax. Now, keep in mind that this tax is the current rate, that 0.58, is only set in stone for 2 years. Then they're going to review it and they may increase it. Now, there's a chance they could lower it, maybe, but I don't see that happening. With the way that medical costs continue to go up over the year, our aging population, and the fact that the benefit that the program provides is also set to increase along the way, chances of the payment going down, probably very unlikely. So you can probably expect, if anything, for the rate to go up. Now, the current program provides $36,500 of benefits if you're fully vested. To get fully vested, you need to have 10 years of paying into the program. If you have less than that, you're going to vest as a portion of it. So if I only work, say, 2 years and then I decide to retire or I leave Washington State, you've essentially accumulated 20% vesting period. So you're going to get 20% of that $36,500 to be used for long-term care in the future. So that's one recent change that they made to the program. The other exemptions to this is if you're someone that works in Washington State, but you live outside, so you live in Idaho or Oregon, you are also exempt from this program. If you're a spouse of military, if you are military with service-related disabilities, you guys are also exempt. I had a whole video on all the recent changes, which I'll link up here. Now, for some other questions that we've been getting on my other videos about this topic still, is if I already got the exemption back in 2021, I have my long-term care insurance policy, I got the exemption letter, handed to my employer, and I'm exempt, can I just go ahead and cancel my policy? Well, the fact is, can you? Sure, you could, but it probably doesn't make a lot of sense for two reasons. First, the whole purpose of the program is to help provide long-term care benefits. You paying into a program to opt out of this tax just to cancel it is essentially wasting money in a sense, and you're still going to be more than likely paying long-term care services out of pocket in the future. This program's main point is to help cover costs of long-term care in the future. Yes, I know $36,500 is a drop in the bucket for someone that actually needs this type of care, depending on what facility you are or what area of the state you live into, but it's a step in the right direction. So if you cancel your policy, you're pretty much raising your hand saying, I'm willing to pay out of pocket in the future. The second thing is that although the current law says that you have a permanent exemption on it, if you move employers and they require you to provide proof again, you might not be able to get the same proof if you don't have a policy to upload to the state to get a new exemption letter. Also, in that fact, remember that the law always changes. So if there's been talks and it hasn't quite passed yet, but if they decide that they want to start doing audits, saying that you have to provide proof that you currently have coverage and you don't have the proof, you could be faced with not only being enrolled back into the program, but also potentially paying back taxes or penalties for not maintaining coverage. Same thing like your car insurance. If you don't have car insurance and you get caught with that, there's penalties for that. The same type of thing is going into effect here. So you need to maintain long-term care insurance after you got the exemption. The policies that I got for my wife, I plan on keeping it in place. To me, it just makes a lot of sense. I have a set premium amount. As she climbs up the pay scale, I don't have to worry about that bill increasing more because we got that exemption. And in the fact that she needs long-term care, it's there. If she doesn't, this is a life benefit. It's a death benefit to the family. So there's multiple ways that the policy we have set up can be used. And it's the same that I'm sure many of you guys got out there back in 2021. So it's a pretty good policy to keep in place. They're fairly inexpensive overall. So I don't really see a need to really change it, because really all you're deciding now is, are you willing to pay more money now, or are you wanting to pay much more money later when the medical costs are higher? That's the latest update I have for you guys on the Washington long-term care tax. There's bound to be some more changes along the way. And of course, I'll keep you guys up to date. Until then, I'll see you guys next time. Remember that your future depends on what you do today.